In this video, I'm going to show you exactly how you can capitalize on both sides of the market by understanding where large institutions are positioned. I will show you exactly how to align your higher time frame analysis with the volume profile to find super sharp, super clean supply and demand zones where institutions are conducting their business. This way, you can jump into the order flow and confirm your trade with a very high conviction. So without further ado, let's jump into the video, and this one is going to be our true gem. Okay guys, let's break down this trading day, because this was a day where I got 6.5 hour in trading profits, but more so there is a lot of good knowledge that I can give to you by breaking down these trades, so you can actually do the same thing by using the volume profile and order flow. Of course, I do apply supply and demand into my trading as well, but by using the volume profile, that is actually enough. So let me show you exactly how I took this short trade right here for a 3 hour, and then when that short dropped to a specific level using the volume profile, I actually longed the market, a pullback in a bearish market for a 3.6 hour. So coming into this day, my higher time frame analysis were actually bullish, and I will actually show you why. So before going into that, I just want to show you the trades on TradingView. This is the E-mini futures M5 TradingView. So where I decided to short was here, and I decided to long here. Okay, my long, the target was this supply, short was this demand area that I targeted. So let me show you exactly why I took the short here and the long here. And to be honest, I could have taken a short right here as well, but it wasn't as high quality. But in hindsight, putting all of the pieces of the puzzle together, this was actually a very good short as well. So now we are in my professional volume profile and order flow chart called 𝗧𝗛𝗓, and in here I will exactly show you why I decided to short and why I decided to long, so on and so forth. So looking at this is the M30 candles. This is that M30 candle that dropped, all right? And then I longed this low and I shorted somewhere around here, I think. So with that being said, let's break everything down. What are the locations of all of these trades? So if I just increase the window of this, by me increasing the window, I just want to see where the largest institutions are positioned inside of this price action. So I take my volume profile, and if you have been watching my previous YouTube videos, or if you have been going through my free school community free course, then you will understand why I draw the volume profile this way, and I don't use the daily, weekly and monthly session profile and so on and so forth. So by just drawing this like this, okay, I'm not going to include that specific day because this is a pre-market analysis, right? So this is the session open, this M30 candle. So I'm not going to include that. This candle is not included. As you see, I draw the volume right before that. So what I see on the charts right here, so let me just include this as well. I just want this as well. So what I see on the charts right here is that I see that a lot of transactions has been made at these highs. A strong seller entered the market, and I have a breakdown on this trade on my YouTube channel as well that you can go and watch. A strong seller entered the market, and we pushed below where we previously had built value. So we are escaping value. But what was interesting is that when the sellers were pushing and we escaped value, if I place a white line here, this is where we escape value. So what was interesting is that we got a failed auction at this low. So yes, sellers pushed, but the buyers bought again. Okay, but this is just one contextual bit in a higher, like we have to put a lot of contextual puzzles together to understand in which direction the market wants to go. By using the volume profile, we see a failed auction at these lows, and we are seeing that if we should drop, a very strong buyer is present at this level. This is the point of control where the most volume was transacted. So even if I mark this level like this, you can clearly see that we went exactly into it, and this is why I took that reversal trade for a 3.6 hour trade as well. So let's break all of these trades down, and I will show you exactly how I took the sell and how I took the buy, and how I switched my narrative from bullish to bearish in an instant. And that is the most powerful thing that you can do as a trader, understanding what areas we break that you have to go bullish above or bearish below. So with that being said, let me just mark out these levels once, since we are on the M30 chart, I will mark out this level as a high conviction zone for me. And I will mark out this level as where we had the failed auction. And then I will close this M30 chart and I will go to the M5 chart. So by looking at the M5, let me just increase this window a little bit. You can clearly see that this was the level when we went below and we had a failed auction. What is a failed auction? A failed auction is an attempt by the sellers to drop to the next high volume node, to the next area where buyers are present. But you can clearly see a large amount of buying came in here. If we zoom in on the order flow, we see that all in all, 2K of contracts in just these bubbles came into the market and lifted the auction higher. And this was actually at the end of day. So we see large amount of contracts coming in, market goes higher. Prior to this white box is the New York session open. Prior to this, we can just inspect and see what price is doing. We are seeing someone selling these highs, and I even mentioned this on my Discord. So we are seeing the sellers here, this high, see sellers, these highs. So this is the thing, right? If we are seeing some strong seller coming into market all the way up here, here. So you're just following his footsteps. So where is he selling? So when the market opens, we have kind of conflicting information. We have a strong seller selling all of the highs, but these sellers actually failed to bring price lower and we stayed bullish kinda. So conflicting information, but still, this is why it's called discretionary trading, right? You have to put the pieces of the puzzle together. So what we do right now is we wait for the session open and let the market tells us which direction we want to go. So with that being said, look at this, market opens right here. The first thing that we get is that a large sell order comes in. Doesn't respect that, market goes higher. Comes lower, then a large buy order comes in. But this time, this buy order immediately failed and put in a lower high. So by looking at the pressure of the market, and the concept of pressure is something that I developed myself on how to read the context. I can just quickly explain it. Look at the pressure of the market, especially when we put in that lower high and we have a lot of trapped participants, meaning a lot of market buyers coming into the market takers and failing. And imagine if you want to buy 763 lots of buyers comes into the market and immediately you drop. This is a very bad sign to be bullish, right? But yeah, let's wait. Let's wait for us to break below this level where we had the high volume node ending, where we had the shelf. And all of this is explained in depth in my school community. There is a free course over 7 hours showing you exactly how to trade order flow, understand auction market theory, and understand the volume profile and mark what levels on the volume profile. I even include 2 hours of backtesting sessions in that free course. So make sure to join that, and the link is in the description, because there is a lot of things that I will explain right here that is easily, like, you will understand it fully if you go through the full course. That course is truly, it is a gem. It's not just surface level information, I promise you. So with that being said, look at this. This is showing me strong sellers are inside of the market. Market drops. Okay, so how can I catch this short? I don't want to FOMO in, right? These are M5 candles. How can I catch this short? So I need an opportunity to short. Okay, and I want to see true strength of the sellers as well. For that, we have to go even lower. We have to look at the footprint, or we can look at the M1 with the big trades. So let's go lower. So we come to the M1 with the big trades, and this is one of my favorite ways of reading order flow. So we see the same thing, right? We see a lot of buying going on, but quickly market closed lower. And we are coming lower. So at this low, we are not seeing anything significant, but what we are seeing here is truly a gem. What we are seeing exactly here is that we are seeing a lot of buyers failing to go higher, which means that we have a sell limit order. And then we are seeing a lot of sellers coming in. Market pulled back to this area and we see a lot of buyers trying, but market went below. Okay, are you getting it? Like, you are seeing the sellers coming in, both market executions and sell limit orders. Because if you have buy orders coming in and market goes lower, it's a sell limit order here. All of this explained deeply in the school community. Market pulls back to this area where these strong participants are, and we see a failed attempt of the buyers again. Isn't this 10 out of 10 beautiful? I was unfortunately, when I was looking at this, I didn't short the market here. I actually waited for the market to rally up here because this is an area of supply right now. This is an area of supply. I waited for the market to rally up here, and here I got a confirmation to short. But this, like, you see how quickly market went lower. I literally didn't have time to execute. So market quickly went lower, but where I find a good area to execute that short that you saw in the Discord, let's bring that up again. So the short was here. So look at this. This is that same candle that I told you I was trying to short the high, but it quickly went down. And then I saw on the order flow that this is where stuff is shifting. I can place my stop loss above this with high certainty that it won't get taken out, and I can target the next area where we meet the strong buyers. Okay, so look at this. This is where I decided to short. Why did I decide to short right here? Let's break everything down step by step in a very good detail, because look at this. If I just remove this indicator and you're just watching the M1s, are you getting all of this information? Are you understanding that there is a strong seller positioned here? Is that information available to you? No, this is why you need order flow. Are you seeing that there is a buyer trying to go higher but he gets stuck? No. So that means that there is a sell limit order. Are you seeing that we pull back to this sell limit order and market push lower? No. This is why you need order flow. So not this one and not the adaptive one. I have a custom big trades, and this is, you will get my full template when you join the school community. So you will get all of these settings. But look at this, market goes lower, breaks below where previously sellers were weak. Okay. A lot of buy trades, a lot of sell trades, the result of all of these battle war that we went lower. And what do you see when we go lower? You're seeing a lot of buy orders coming in. This is substantial. If a lot of buy orders comes into the market, but the candle goes red, it means that there is a sell limit order absorbing all of these buy orders. So stop loss here, entry here. As soon as I saw this, market sell, my stop loss is safe here. To be honest, my stop loss is even safe here, but I'm not trying to be sniper with all of my entries. Because why is my stop safe here? Because there is a sell limit order here, there is a sell limit order here. So if I place my stop loss here, I'm protected by two big institutional players. Market dropped, I took profit exactly at this buy zone, and I decided to long the market instead, because now we are at the area where buys are truly strong. And when I long the market, I target this area for a 3.5 hour. So let me show you that trade as well. So short, and let's take the buy as well, as you see right here. So that's the long. So why did I decide to long it right here? Of course, we had an order flow confirmation, not very visible on M1. So for that, we had, or I can even explain it right here, but I don't want to get too advanced. So we are dropping a lot of sellers right here. See, a lot of sellers. But what happened in the end is that the buyers took over. A lot of sellers here as well. Buyers taking over and breaking above the area where previously sellers were strong. We pull back to this area, buyer steps in again, and this time it is rewarding these buyers and market goes higher. So very simple, but keep in mind the location of the trade and the contextual bit, that the contextual puzzles that we were putting in place before looking for a confirmation. So let's look at the order flow or footprint right here. So this is why I use both the footprint and the M1 with big trades. That short trade that I took was somewhere inside of this. This is not like what I'm trying to say. On M1, it is very easy to see those details, but on the footprint, it is not as easy to see those details. But on this low, it was very easy to see that the sellers are failing to push the auction lower. So this is why I combine both tools. Sometimes one is clear to me, sometimes the other one is clear. The true edge in the market is to be able to read all of them. Because if you mark a very high quality zone, and if you miss that trade because one tool, maybe the footprint was showing you didn't give you enough confirmation or conviction in the trade, or maybe the book map was slightly, we didn't see it clearly. So this is why you have to combine all of them. The logic of order flow is the same. The tool that you watch it on can differ. So what are we seeing right here? We are seeing that the market comes to this level where the point of control. And what is the point of control? So let me show you the point of control. So I'm not just taking a buy trade in a random area in the market, my friend. I'm looking at exactly where, let me just go full screen. In all of this price action, look at this. This is the M30 candles in all of this price action. This is literally 1 month of price action. I'm looking during this whole month of price action, where was the most amount of contracts, or where was the most amount of business being transacted? Right here on the point of control on this yellow line. So I'll mark out this zone. Of course, I combine it with my way of marking supply and demand. So therefore it becomes much, much, much stronger. And then I go to the order flow, and at that specific sniper zone, I look for an order flow confirmation. Look at this. Let's go and let's break down the order flow confirmation. Super in depth, guys, but these are the details that you have to understand in order to, like if you're trading candlesticks, how do you know if you're taking a buy trade, who you are buying into? It's impossible. You're not seeing that. But here I can clearly see, look at this. If I'm taking a buy trade right here, I'm seeing that I'm buying into 416 of aggressive sellers. So I don't want to buy into this. I want the buyers that comes in at these lows to show strength by breaking above this area. Then I want to pull back to see if the pullback holds. When the pullback holds and the strong buyers comes in, market enter, stop below this. To be honest, to be fair, I can even have a sharper stop loss because it's the end, right? Look at this. Coming to a very good buy zone, like you took a full month of price action, you found a zone. It is literally 3 points or 4 points. You found a zone of 4 points inside of a full month of price action using the volume profile. Market comes lower. What you see at these lows is that the sellers are failing to come lower. Buyer steps in, but this is not aggression. This is not the absorption or aggression. There is more information here as well. And this is something that, I don't know, order flow traders won't tell you on YouTube. I don't know if they know or if they don't want to tell you. So don't know. But look at this. If we have an area where buyers were weak, sellers strong, and we break above this area, and then we pull back to this area and it holds, what is this? Once was a resistance, now becomes a support. Once I see this, this is 10 out of 10 confirmation. To be honest, once I see this, I could easily enter long here, stop here. But what I did that day, I was waiting a little bit more to see if these buyers also step in, just to confirm my confirmation upon confirmation. And keep in mind, all of this is happening super quickly. Let's see, this is in the span of 2.5 minutes, like 2 minutes, all of this is happening. So you have to be awake when price is coming to these sniper levels. So of course, a lot of selling pressure, market is super bearish. So when I decided to long it right here, I targeted the closest area where sellers could step in. And if you go to M5, if you look at this area, let's go full screen again. If we come to this area and I long the market, where is the closest possible area that sellers can step in? You see the big trades, you see the big bubbles. This is where institutional activity took place. And this is why market came here, struggled, but in the end, buyers were stronger, left the M5 demand, pulled back to this, M5 demand held for a little bit, but since the overall contextual bit was bearish, market went higher and dropped. And now you might be asking, where did we go into? You don't need to guess. Look at the order flow. Or sorry, look at the volume profile. Let's measure it this way. Look at this volume profile, point of control. Now you think I'm shitting you. Point of control right here. Isn't this to the tick? Don't know. I think I made my case why I trade the volume profile and order flow. So if I draw area where I see where the most transactions was happening right before this drop, and I mark that specific tick to the tick, 6,997, market goes up there and strong sellers comes in and drops. Isn't that a beautiful trade? Same thing goes here. If I go to the charts and I mark the volume for over 30 days and market drops exactly to this area, look at this. This is the point of control. It came one tick above. Of course, this is the highest volume node, but the area where we had the most amount of volume in this full month, it came one tick above and reacted. Are you seeing how I can find the sniper zones? And as I said, all of this is broken down step by step in the free school community, so you can exactly take the same trades that I take. I'm trying to give you as much as the value that I can. Like these stuffs are not, this is how professional traders trade, but they don't show it on YouTube. So with that being said, I think this video was enough, super eye-opening. Of course, when I show it to you like this, it might seem easy, but this comes from years and years of experience by understanding what areas I want to see the volume, what kind of confirmation I want to use when. Of course, there is even more to it than this is that I'm telling you, but just to keep it simple, even though it's not simple. This is why I use these tools to find very good high quality zones. And if you join the school community, I will actually post and break down all of these trades there as well. So with that being said, have a good day, have a good night, and talk to you in the next video.